Good morning, everyone. I would like to welcome you all to this virtual press conference as BK Group PLC presents its Q3 and 9 months 2022 financial results. My name is Bob Rutarindwa, and I'll be moderating this virtual presser. I would like to thank you for joining us today and honoring our invitation. Now, with us today is BK Group CEO, Ms. Beata Habyarimana, Bank of Kigali CEO, Dr. Diane Karusisi, and Frank Gatto, our head of finance, who will take us all through the financial results. And after the presentations, we will have a Q&A session where our panelists will be answering questions from the journalists. So please feel free to drop in your questions as the press conference goes on in the chat box so that we can attend to them later on. Now, allow me to welcome BK Group CEO for her opening remarks. Thank you.
Good morning, everyone. Thank you for attending this Q3 financial announcement for BK Group PLC. We are happy to announce our financial performance for this third quarter of 2022. By reporting a strong performance, we are happy to see that it has been able to take place despite the turbulent macroeconomic environment we can see domestically and globally. But we're happy also to see that BK Group remains the leading financial group, keeping 30% of the market and having great results to deliver. The current macroeconomic environment shows signals of an economic recovery, both domestically and globally. Rwanda has been recording 7.7% of economic growth for the first half of 2022 compared to the same first half of 2021. But despite an inflationary pressure, we see having at least 13.2% for 2022 of inflation rate. We expect to see for the first quarter of 2023 a decrease, hoping to have below benchmark by the end of 2023 of at least 8% in terms of inflation. During this quarter, we've also seen the central bank rate increasing from 6% to 6.5%. And we consider it as a strategy to maintain and protect the consumer purchase power, but also to keep down the inflation. It's also a signal of an economy recovery and a recession going down. We're happy to see that the consumer price index also stayed stable by 20%. And especially for Rwanda, we're happy to see that the exports growth rate kept showing an increase with 39.9%, which gives us the flow to expect better results in the future. This is due to several commodities and added value to minerals and manufacturing exports. Though, despite the energy and fuel prices keeping growing up, we expect to benefit from that, especially as Rwanda has acquired a new fleet with cargos plane, allowing us to also expect financing exports more. BK Group PLC is happy to announce a good performance, reporting a net income of 43.5 billion Rwandan francs, which shows an increase of 18.5%, with the return on assets and return on equity reaching respectively 3.5 and 19.5%. We stay confident and optimistic that BK Group will continue to meet the shareholders' expectations to deliver good financial results and to have its impact on the economy with a steady growth. Thank you.
Thank you so much, Beata, for the opening remarks and the overview of the Q3 and 9 months 2022 financial results. Allow me to also invite Bank of Kigali CEO Dr. Diane Karusisi to give us the the BK Group's performance across key metrics. Thank you so much.
Thank you, Bob. Thank you, Beata, and good morning, everyone. Thank you for attending our press conference today. As Beata said, we've seen sustained improvement in our business across all the subsidiaries, and that has allowed us to post an net income growth of 18.4%. So when you look at our financials, you'll see that our total assets have increased by 13.4% to over 1.7 trillion francs, which is 1,700 billion francs. We believe this is a very good performance. This is mainly driven by the loans, but also a lot of investment in interbank and treasury, because we've seen very good growth in our deposits. So you can see also that client balances and deposits increased by 21.5% year on year. I think this is probably the highest, the highlight of the quarter, because we've seen our teams very aggressive in mobilizing deposits. And this at an affordable cost, because you can see that our cost of funding has remained almost flat quarter on quarter at 3.8%. So this is a great performance, and this gives us a lot of muscle to continue our lending business. You'll also see that our shareholders' equity increased by 11.2% to 309 billion, again giving us a lot of strong capacity to continue lending and taking risks and adding risk assets to our balance sheet. Net loans and advances increased only by 4.4%. This is mainly driven by a major repayment that happened in the first quarter that we've not been able to cover. So we've seen high attrition because, as you remember, during the COVID period, most loans were on moratorium. And all of them have started to pay, and that is leading to a high attrition. And our teams are mobilized to get risk assets that are well priced in the current market. So the best news of the day, maybe you'll see it in our financials, is cost of risk. That has halved year on year with 1.5% as at quarter 3 2022, from 3.7% same time last year. This is mainly driven by a lot of upgrades of businesses in the hotel and hospitality segment that were in an NPL category, and many of them have been upgraded to either watch or a performing category. This, we believe, is a very good development, and this is driven by the booming, the boom that we see in hospitality, in particular in conference tourism, where the country has been hosting major conferences in the past couple of months. So this is helping us then to report an 18.4% net income. The outlook remains positive, although, as Beata said, the macroeconomic conditions are not very favorable. The central bank increased the rates. I think this has been the third increase in a year. You remember in January this year, the CBR rate was at 4.5%. Today we're at 6.5%. So we see cost of funding increasing. When you look at interbank rates, all of them have increased in parallel. So we are trying to see how we can mainly mobilize demand deposits to make sure our cost of funds remain stable. So what we see in the this coming quarter, we hope to post a performance that is, about 20% growth in net income year on year, because we've seen some good growth in the last quarter of the year. The banking business is growing fast in this last quarter, mainly driven by some developments in manufacturing. The largest breweries have been borrowing to increase their capacity, and we'll see that reflected in our financials for the year. I think that's what I can say, and I'll be eagerly waiting for your questions so we can address them. Thank you, Bob.
Thank you so much, Diane, for that overview and deep diving into the numbers. Now, our next session is going to be the Q&A. I would like to invite our partners and journalists on the call today that you can share all your questions in the chat box, and we can answer them. We have 3 amazing panelists that will be taking on these questions, so please feel free to drop your questions in the chat box, or even raise a hand so we can give you a platform to pose out the questions. So thank you so much. Thank you so much, Juma. I think we have our first question. Juma from Soko Directory in Kenya is asking, what is the impact of BK's recent digitization efforts on performance? And I think we can take one question at a time and then get over to the next one. So I think CEO Diane, do you mind taking this?
Thank you. It's indeed a very good question. Maybe you followed, Juma, that we launched BK Digital end of September this year. It was the 30th. It was a very colorful event where we were showcasing everything that our team has been able to not only design but develop. So we now have a brand new app that we believe is amongst the best in the market. We also have an internet banking platform mainly for corporate, because this is the main segment we serve, that we believe it is at par now with the market. So when you look at the deposits we've been able to mobilize, this is mainly because of the internet banking platforms. We used to see some of our clients multi-banking because our platform were not at par. They were not able to do everything they wanted to do online. So today, this is history, and that's why our team has been able to mobilize deposits, and this has reduced the cost of these deposits. Something also that I can say is, unlike other banks in the market, we are able to fund our business with lines of credit, typically from DFIs in the region and globally. And with rates increasing, this has been very expensive. So we've been able to retire some of these lines of credit early in advance because we couldn't bear the costs. And this has not at all affected the liquidity that we see in our balance sheet. We still are very liquid, and this really gives us a lot of lending power going forward. So as we speak now, I think the main impact has been the ability to mobilize affordable or cheap deposits to remain liquid. And we believe that this will also help us expand our retail and SME business, because we have the right platforms that can enable us to serve people digitally. Thank you.
Thank you so much, CEO Diane, for answering that question. Now we have another question from Shadrach Nyakoe, I believe from Kenya as well, and he's asking, what has helped BK's customers who were most affected by COVID-19 to recover so quickly? And which are the sectors that have recovered fastest as per your loans data?
Thank you. I think that the management of COVID generally was very good in Rwanda. We probably have the highest rates of vaccination on the continent. And that's why we've seen tourism picking up. As you know, Shadrach, Rwanda hosted CHOGM, which is a major conference. Only a few weeks back, we also hosted the Mobile World Congress, which is a big event bringing people from telcos and fintech globally. So I believe when you look at COVID with the restriction in transport, movements, hospitality, most of the hotels got affected. Most of them also got some support from the government through a fund that was dubbed Economic Recovery Fund. And the way this fund worked was helping them to refinance part of their loans at a very affordable rate. So typically 30% of the loans in the hospitality industry were refinanced at 5% against a market rate around 15 to 18% for the highest rates. So this has helped them reduce on the financial burden. And the other thing that the Economic Recovery Fund was giving is working capital at, again, an affordable rate of 8% to enable these hotels to renovate, to buy some stock as they were preparing to host these big conferences. So because of that, because of the boom, as I was saying, in the tourism industry, both leisure and conferences, we've seen most of the hotels now, coming out of the dark and now being able to service the facilities without any problem. One sector that we believe remains challenged is the real estate, the commercial real estate sector, where we've seen some actually high, profile auctions in the market in the past couple of months. And we also have some clients in that sector that are still in NPL. And the plan for us, obviously, will be to auction because we don't see any hope for these clients. So basically, I would say the hospitality industry seems to show very, very good signs of recovery because most of them are now paying very liquid and have a reservation book that goes all the way to early next year. So this gives us a lot of comfort. And we're still, looking at the real estate commercial sector, which is still challenged. And, we don't see much hope there. And what we'll be doing was to follow forced recovery. Thank you, Shadrach, for your question.
Yeah, thank you so much, Diane. Great insights there. Now we have another question from Saul Butera from the Bloomberg. And he's asking, what is the net income outlook for net year versus this year, and what will be the driving factors?
Thank you, Saul, for your question. So we believe we can end the year with 60 billion, around there, net income that we'll be able to distribute to our shareholders and reinvest a part of it, which we believe is a very important improvement from what we saw last year. Last year, I think at group level, we were at 43 or 45 billion. Growing to 60 billion, we believe, is a major achievement for us. And I think this will speak to the efforts that all our teams are putting into the work they do every day. As usual, driven by the performance of the bank, but also subsidiaries that are now contributing more and more to the top and bottom lines of the BK Group PLC business. You've seen that in the insurance business, despite the fact that there's very stiff competition, a new insurance player has come in the market, captive insurance, looking at some special assets. So we've lost many of these policies. But we've been able to show resilience as when you look at the profitability of our insurance businesses are actually increased by about 15% year on year. So this shows the solidity of the group and also speaks to the hard work and the commitment of our teams. Thank you.
Thank you so much, Diane. Now, we also have a question from Simon Kamzinzi from Kigali Today. And it is in Kinyarwanda. I'll read it for you. Arabaza ngo mwagira icyo muvuga kuri iyi raporo mu Kinyarwanda ubwo mwamushyira mu ncamake. Yes, thank you.
Murakoze Simon, nkuko mwabyumvise mu Cyongereza ni ishusho yuko BK Group PLC yakoze mu mezi 9 abanza uyu mwaka. Nkuko mwabibonye profit inyungu BK Group PLC yakoreye aya mezi 9 igeze kuri miliyari 43 n'ibice bitanu. bigaragara ko ari inyungu yiyongere ku kigero cya 18%, ni ibipimo bishimishije. Ibyo byose twabigezeho kuko business zose dukora zagiye zunguka neza, ari banki kubera inguzanyo na business bank ikora, ari ubwishingizi, ari BK Capital n'ibikorwa by'ikoranabuhanga, byose byagiye bigaragaza inyungu ishimishije. Niyo mpamvu nka BK Group PLC ko niyo ikubiyemo izo companies enye uko nazivuze yagize inyungu ishimishije. Details mwabibona muri report, naho ubundi wenda twagira ikindi kiganiro kugira ngo tujye tubacishemo mu camake uko business yacu yagiye ikora muri iki gihe. Murakoze.
Yes, murakoze CEO Diane kuba mumusubije neza. Hanyuma allow us to, I'll be switching languages, excuse me, but we are now going to another question from Edwin Ashimwe from the New Times, and he's also asking, I would like a deeper understanding of the impact of the increasing repo rate by the central bank, particularly as CEO said, looking at the geopolitical and microeconomic mayhem. Thank you so much.
Thank you for your question. As it was highlighted during this year of 2022, we kept seeing the central bank rate increasing, usually by 50 basis points, but then we consider it as one of the strategies to lower down the inflation across the country, as this in one end can protect the consumer purchase, but also by lowering down the inflation, by retrieving that liquidity, you can immediately see it in our figures by an increase in even terms of deposits. So it gives us an impact of having a lower cost for our funds and also increasing the savings. We believe that this also will have a direct impact in terms of economic recovery. We are going to have this new central bank rate for this quarter from November to February 2023. But this goes also in alignment with the expectations of the inflation rate for next year, where the figures show that the first half of 2023 will contain that inflation, and hopefully seeing the second half of 2023 going down, being lower, and even being in the benchmark of around 8%. This has a direct impact on our financials, as it will be facilitating the flow of financing and also boosting up the recovery.
Thank you so much, CEO Berta, for that great response. We have one last question, again from Juma. And Juma is asking, how does BK's cost ratios compare to the industry, and what is the bank doing to contain the costs? Thank you.
Thank you, Juma, for the question. When you look at our cost ratios compared to the industry, they've been actually lower. We are a quite efficient bank with a cost to income that has been historically below 40%. I think this is not only domestically, but even if you look at the region, I think this is a good sign of efficiency. We believe that in the past years, we've done a lot of investment in digitization. As you've probably followed, we had a big program to migrate to a new core banking system. We invested in our technology infrastructure, a new data center, also in our technology talent. And this has increased slightly the costs of running our business. But this is driving also a lot of efficiencies. As I said earlier in the press conference, we are now able to collect deposits at a cheaper cost. And we now have, for example, a digital onboarding program where people with a smartphone are able to onboard and open an account without going to a branch. Something that also this digitization has helped us do, maybe if you follow the news in Rwanda, we partnered with Internet to finance smartphones. In Rwanda, smartphone penetration is at around 25%, which is very low. I think by any measure, this is very low for the region. And we want to push this smartphone penetration to even 50%. I think we'll still be low, but this is something we believe is achievable. So this does many things for us. First of all, it enables people to have services on a smartphone with a better experience because we've invested in that experience. But also we want to see more people off our branches, even not going to agents, because they have everything they need to do to have in their smartphones. So this, I believe, and when you look at the slight increase in the cost, is because of the depreciation. When we were doing the transformation program, everything was capitalized, and now that all the systems are live, we've started to depreciate. It shows this increase only this year, 2022, because as you know, we went live late last year. Going forward to 2023, we are not expecting to see any increase in our depreciation and other OPEX, and this will keep us in the range below 40% for cost to income. So this is what I can say, and also other measures. Of course, staff to income has been quite low. Staff to income for us is below 18%. That shows that we are a very solid business, and our people are quite productive. Thank you.
Thank you so much, CEO Diane. And as we wind up this virtual presser, I would also like to welcome again BK Group CEO Beata to give us a closing remarks. I'm assuming no further questions at the moment, so the floor is yours.
Thank you, Bob. I would like to conclude by thanking you all for attending this announcement of our BK Group financials for Q3 2022. We stay strongly confident for the future, especially this last quarter, concluding the year 2022, but also with the expectation of 2023, especially for the first half of it. We stay ready for any other question which can come, but we also can confirm for you that with this net income recorded, the shareholders and other stakeholders to our group will stay finding and receiving good deliverables. Thank you.
Thank you so much, CEOs. Thank you, Frank, as well. And thank you to our partners and the journalists who tuned in this morning to follow our press conference. We stay in touch for any further questions that are coming in. We will make sure to get back to you on any queries that you might have. Now, thank you so much for tuning in again, and we call it a day. See you next time. Thank you. A few more minutes for just one question that just came in. It's in Kinyarwanda, and this is I am not able to see the name. Oh, it's Kamuzinzi from Kigali Today, and he's asking, nongeye kubaramutsa ni Kamuzinzi, ni ikihe cyizere BK iha abanyamigabane ko bazakomeza kunguka mu bihe bizaza? Ni iki mushingiraho? Murakoze.
Urakoze Kamuzinzi ku kibazo ubajije. Dufite icyizere gikomeye cyo kugira ngo abanyamigabane akomeze kugira urwunguko. Icyambere duheraho ni imikurire y'urwunguko, imikurire y'inyungu tubashe kugaragaza umwaka wose ikomeza kuzamuka, nubwo ubukungu bw'igihugu mu gihugu cyangwa se ku rwego rw'isi bugenda buhungabana. Icya kabiri ni imishinga dufite, dutekereza ko nayo izabasha kubagaragariza ku bundi buryo urwunguko rw'abanyamigabane mu kwagura. Amakuru tubateganyiriza mu kindi gihembwe, ariko ashobora kubagaragariza inyungu bigarukira kuba atari ku abanyamigabane gusa, ndetse n'abakiriya muri rusange. Uko kunguka buri gihembwe mu gihe cy'umwaka, nubwo hari imizamukire mu bukungu ihenze, icyo cyizere cy'uko inyungu dutanga ku mugabane, the dividend itangwa ku mugabane, izabasha gutangwa ku buryo bukwiriye mu mpero z'uyu mwaka tumaje kugira imibare ya nyuma y'umwaka.
Yes, murakoze cyane CEO. ndabona nta bibazo bindi dufite ubwo I think we can wind up and wish everyone a great day and thanks for tuning in. Thank you so much.